Eric Kalis, we're going to go to you with story number 2. This piece is coming out of the BBC, and it has to do with Jamie Dimon. Jamie Dimon runs JP Morgan Chase. Some look to him as probably one of the best bankers on Wall Street. He's a little bit on the bearish side, which means he's a little Chicken Little, a little pessimistic. So that's kind of the background, Eric. I'm going to go ahead and read you the headline, first couple graphs, and I want you to provide some insight. So headline, Jamie Dimon says that the U.S. interest rates could rise to 8%. Now, the story doesn't clarify if he's talking about U.S. federal funds rate, which is right now 5.25 to 5.5, or if he's talking about the overall interest rate, I'm guessing, on mortgages or maybe the 10-year treasury. So it's a little bit vague, but we're just going to run with that. So here we go with the first couple graphs, Eric, then I want you to comment. The boss of one of the world's biggest banks has warned U.S. interest rates could climb to 8%. Jamie Dimon, the head of JP Morgan Chase, said his bank has prepared for interest rates to jump because of persistent inflationary pressures. Central banks around the world have been busy raising rates in a bid to dampen rising prices. But with U.S. inflation gradually easing, the overwhelming expectation is for the Federal Reserve to cut rates this year. Markets are pricing in 2 quarter-point rate cuts in 2024. I will mention at one point it was 6 that they were looking at when we were going into 2024. And then the story goes on to say, in his annual letter to shareholders, Mr. Dimon said that the bank was ready for a very broad range of rates from 2% to 8% or even higher, potentially pushed up because of high government spending and the need to curb price rises. Eric, last time you were on in season 4, I think we also gave you a Jamie Dimon story where he was also Chicken Little. He was a little bit bearish. And at the time, I think he was talking about 7% interest rate. We don't see that yet today. So I'm wondering, why don't you give the audience some perspective about Mr. Dimon's ability to predict the future, and also more so his argument that because of the variety of government spend that's out there, that, it might be necessary to try to calm inflation. What say you, Mr. Kalis?
Yes, I am 2 for 2 on Jamie Dimon related interest rate topics. And this is actually perfect timing for me because I just got back from the Urban Land Institute Florida Summit, the annual event. This year it was in downtown Tampa. It was phenomenal. And not surprisingly, the interest rates were a big topic of discussion with real estate experts from all sectors weighing in. And I will say that there were at least 2 veteran real estate professionals in panel discussions who at least floated the idea of 0 rate cuts in 2024. And that was the first time that I've heard explicit references to 0, because the conventional wisdom, you're right, we had heard maybe 6 last year. And then at the onset of this year, 3 has been the number that's been thrown around a lot. This was the first time I heard 0. And the CBRE economist who made a presentation, kind of a keynote presentation, Spencer Levy, he also floated that idea, but stood by his prediction, a very soft prediction of 3 rate cuts, with the caveat that last week's jobs report, not to put an exact date on this because I know people will tune into this at different times, but the most recent jobs report was so positive that it gave him pessimism about the 3 rate cuts. So it seems like somewhere between 0 and 2, which is certainly not going to bring a lot of relief to those who have been waiting on the sidelines, especially the commercial real estate players. We've been at a very stalled commercial real estate market, particularly multifamily office, where, there are people that would love to swoop in and acquire stuff right now, because multiple experts during the ULI summit said this is a generational commercial real estate buying opportunity right now. But the interest rate environment combined with the insurance costs, especially in Florida, has everybody still on the sidelines. So 8% is not something I'm hearing from anybody else, but starting to hear noise about 0 Fed rate cuts being a possibility in 2024. Another nugget from the discussions was the new normal is going to be a 5.5 to 6% interest rate. That's ultimately going to be where we land. In the home buying market, the people that, myself included, were able to refinance during COVID, get under 3%, we're going to have a reality check. If we want to move forward with our life plans and trade up. A 5.5 interest rate or a 6% interest rate is going to be the new normal. And our parents and grandparents will tell you that's pretty dang good. I mean, they just can't wait to tell you about their 13% interest rate. So there's going to be a reality check. People are going to come to terms with this, and things will start to loosen up again in 2025. I believe John made the very astute point last time I was on, in reference to Jamie Dimon, that, the banks have some major balance sheet issues and they have a vested interest in interest rates, continuing to be elevated. I'm certainly by no means the banking expert, so I'll defer to John and the rest of the panel on that. But Jamie Dimon never says these things in a vacuum, I guess, is the main point that I'm trying to make as far as his interest rate predictions, and he likes to keep his options open as well.
John, is Jamie Dimon talking his book is 8%, which obviously benefited him from a bottom line perspective. Is he talking his book?
Yeah. But his job is to protect the bank. I mean, that's as simple as that. And if rates are going up to 8%, he needs to know like how his bank is going to manage. I mean, it's just going to be a different environment. The one thing I will say is, I mean, if anything in the last few years we've learned is that the guys at the Federal Reserve cannot be trusted at all to tell us anything correctly. I mean, they completely missed the inflation call. The interest rates rose at their fastest rate ever. And, every other day we have a different Fed governor coming out talking about, what they think interest rates will be, so one day it's 7 cuts, the next day it's 3 cuts, the next day it's no cuts, so like all these Fed governors are out there yakking away and nobody knows like, well, what is the path? What is the trajectory? And I mean, you just look at the bond market, 10-year treasury goes up and down like every day, like by major swings. It's just crazy. And the 10-year treasury is what, commercial real estate and so much of the real estate world's lending is based on. You cannot have these wild swings in the 10-year treasury without affecting, real estate, and particularly commercial real estate, but also residential real estate. So, you never know, like, should I wait a month? I mean, are rates going to go down? Like, and then you get all these conflicting reports, and everybody's got an opinion. And it's really, I feel like every time someone from the Federal Reserve opens their mouth, it's a different story. And you just have to like be prepared for the possibility that, maybe 8%. I mean, who the hell knows? Jamie Dimon may be right. Nobody's brought it up, or maybe that there won't be any cuts this year. I mean, I think that's entirely realistic because the Federal Reserve itself, the Board of Governors has no idea what they're talking about. We don't know. They've missed so many calls and they just talk incessantly. And one governor says one thing and another says another thing. You can't get a straight story out of them. So, I mean, I think you just have to be prepared.
Just the economists just keep pointing to, you have this conflicting macro data where the job market continues to be incredibly strong. Unemployment is so low. And basically, as long as that remains the case, you're not going to see these rate cuts, certainly not of any significance. And it's been very tough to wrap our arms around, because I think everybody felt like post-pandemic, you would see some attrition in the job market. Not to mention, there's been high-profile companies, especially tech, the last couple of years that have laid off people in large amounts. But the job data continues to be robust. And so it is hard to wrap your arms around. Jamie Dimon, one of his points is that he thinks all this data is artificial. Basically, all the pandemic and post-pandemic macro data, it's just, almost meritless, which, I mean, I don't know what else you're going to go off of if you don't go off of these indicators, but everything's kind of in a holding pattern because of these conflicting trends.